Welcome everybody. It is great to be with you today. My name is Catherine and I'm a consultant in the knowledge and technical team at Accounting for Sustainability. So in today's session, we're going to be sharing some inspiring stories on integrating sustainability into financial decision making. We're going to be joined by the head judge and winner from this year's Finance for the Future Awards, who will be sharing their achievements and experience. So get ready for some good insights. Please note that we're going to be recording the webinar for others, and it will be made available on the A4S YouTube channel and website next month. So as you know, we like to have some learning objectives for every webinar. So this webinar has 3 learning objectives. After this session, you will be able to understand the efforts made by fellow finance professionals in driving change and embedding sustainability. You will also be able to recognise the role of resilience, collaboration and ambition in driving meaningful change. And you will also be able to translate the practical examples and insights from our speakers to your own work within your organisations. And you will hopefully feel inspired from the various stories that have been shared. The webinar will last around an hour. I'm going to start with a very brief overview of the Finance for the Future Awards before welcoming our guest speakers. There will be some time for Q&A at the end, so please do drop your questions into the chat function and we'll do our best to answer them. The Finance for the Future Awards were created in 2012 and they were created to recognise and celebrate organisations and individuals who are integrating sustainability into financial decision making and also driving change towards a sustainable economy. The awards are a partnership between A4S, ICAW, Institute of Chartered Accountants, England and Wales, and Deloitte. This year we had 5 award categories, as you can see on the screen: CFO of the Year, Rising Star of the Year, Team of the Year, Finance Changemakers, and Lifetime Achievements. We also had additional awards given to entrants who showcased leadership in specific areas of impact, which included communicating integrated thinking, social, climate and nature. And this year we have added a new category, which I'll come to at the end of the session. The awards are open to individuals and organisations globally. We have a rigorous judging and assessment process which ensures the credibility and gives deserved recognition to our winners, who you'll be hearing from later in the session. So a quick introduction to our guest for today's webinar. We have Andrew, who currently serves as the inaugural Charles Field Knight Dean of Cornell SC Johnson College of Business. And Andrew has been involved in the Finance for the Future Awards for a number of years, and we were thrilled to have him as head judge in 2025. We have Joe, who is an ESG controller at National Grid and sits within the group financial controllers function. And Joe's team was awarded both Team of the Year and the Leadership Award for Communicating Integrated Thinking. We then have Meg, who is a responsible investment analyst at Quilter Cheviot. And Meg was a finalist for the Rising Star Award and was the winner of the Leadership Award for Communicating Integrated Thinking. We then have Alexandre, who is a Sustainable Finance and Business Integration Lead at Natura. And he was the winner of the Leadership Award for Social Impact and also a finalist for the Rising Star Award. And then we have Kukai, who is the Executive Director of the Centre for Climate and Business Solutions at UBC Sauder School of Business. The Centre for the Climate and Business Solutions won the Finance Changemakers Award. So a warm welcome to all of you. Hopefully you can see from that quick introduction, we've got a good mix of different award winners, which I'm looking forward to hearing from. But I'm going to start first with Andrew to get your perspectives as a judge for this year's awards. So, Andrew, when you look across the teams and individuals that won, what do you think set them apart from the other entrants?
Well, first of all, thank you, Catherine, for having me here on this webinar. Congratulations again to all the winners. I'm looking forward to hearing from you as well again, and welcome to everybody who's listening in on the webinar. What set them apart is your question, Catherine. You know, in a word, I would say passion. There is passion that we as the judges who are so blessed and fortunate to be part of this award process, we are able to read the actual submissions, and from the pages in the words that we read, there is some sense of passion that you can sense from the teams as they talk about their efforts towards integrating sustainability into the finance functions in their respective organizations, or in being catalysts towards change out there in the broader community. And it is something that is you can see it in the words, but once you actually are interviewing the finalists and you see the way they interact with each other in those sessions, that is, we as the judges, then it just lifts off the page and it makes it a very, very human experience, that you can see that these are individuals who are committed to the enterprise. They're committed to doing well by their organizations, and it is one that we definitely take note of, and leaves an impression on us as we deliberate and render the awards.
And it's always a difficult decision at that final judging piece because people are so passionate and so committed, as you say. And I think those are the two key things that really make people stand apart. So thinking about driving action on sustainability within organisations, what do you think are the key qualities for both individuals and finance teams to
Yeah.
make that happen?
Yeah, Catherine, that's a great question and a really important one. So one of the things that we as a group are looking for is, and you used this word earlier, the importance of resilience. We know that these kinds of changes are not easy to make. There are incumbent interests, whether it's a large, medium, or small organization, in terms of their overall goals and objectives. And sometimes elevating the importance of the sustainability, whether it's related to climate, nature, or social actions. It is not easy. And what I think the judges look for there, Catherine, often are very specific and concrete examples that the teams have encountered that demonstrate their ability to overcome challenges, pushback, resistance, that sort of gives them that sense of the mettle in their efforts. And it's from that the passion that I mentioned earlier comes from. Obviously, in all of this is the importance of drive and ambition. So over and above resilience is ambition. And it is very clear that it's the focus. I would almost want to say single-minded focus on the mission that is important to demonstrate. Again, with very concrete examples of how they have been able to integrate this broadly, how they've engaged with, if it's in an asset management firm, with the portfolio managers and the analysts, whether it's on the corporate side, the broad treasury function, how they've worked to engage with and meet with them on their terms to help them understand the importance of this. This is the ambition part. And in all of this, and you can sense from the importance of these examples, that the teams show themselves to have the best instincts for collaboration, across the enterprise. I think that we're always looking for that collaborative instinct. So it's resilience, ambition, and collaboration that I think are really important. And again, the more concrete are the examples, the more that we can, as judges, relate to what they must be feeling and experiencing. And that's really important.
Yeah, absolutely. And I think those examples just bring everything to life. And when you can share a really powerful example that encompasses resilience, ambition, and collaboration, it helps to sway the judges, shall we say.
Yeah.
Yeah. And what do the awards mean to you? So you've been involved for quite a number of years, and we love seeing you every year and head judge in 2025. So what do they mean to you?
Well, it was an honor to serve as the lead judge this year, Catherine. And it means a lot to me. I've been involved with A4S, Accounting for Sustainability, for I think nearly 10 years, maybe 10 years plus now. I'm one of the global advisory counselors. I care deeply about the mission. And I find, like many of us that are able to be part of the convening of A4S, feel the inspiration of His Majesty King Charles the Third in terms of the goal of driving for advancement in this effort. The award ceremonies are beautiful because they are celebrations of success. Who doesn't want to be part of celebrating successes? So obviously there's a private and personal dimension. I derive great affirmation for my own deep-seated passion for this effort by being part of the experience. I find a lot of energy. I source a lot of energy myself from the younger people that are young professionals that are part of these organizations that are ambitiously pursuing their goals. I also will mention, Catherine, that there is wonderful joy in working with my peer judges and learning from them. These are accomplished professionals that come from many different backgrounds. And while the awardees don't get to see that, when we move into sort of conclave and are deliberating on and among those difficult decisions that you referred to earlier, there are wonderful interactions, learning that happens from my peer judges, not just from the submissions and the finalists. We learned from you for sure, but also from my peer judges. That's one of the wonderful, wonderful benefits that I get. It's just a lot of joy in being part of this whole Finance for the Future award process, and I'm grateful.
That's wonderful to hear. Thank you, Andrew, for sharing all of that. And like you say, the hearing other judges and the questions they ask and kind of seeing how they think is fascinating. And sustainability is such a broad subject that it needs that collaboration, everyone coming together to discuss it. So I'm going to ask you one final question. As I said, you've judged for a number of years. What kind of changes have you seen throughout those years?
Yeah, I think the rigor is the short answer. The rigor of the submissions have been elevated. Everybody's elevating their game. And you see that the quality of the submissions is just generally higher because of the rigor with which they approach. If it's a corporate, the rigor with which they approach the integrated platform through which they're bringing sustainability reporting, for example, the discipline of sustainability reporting practice into the broader organization. There's a lot more focus on execution, as much as sort of early days, we would talk a lot about the planning of the initiative. Here now, it's a lot about execution and outcomes. And that all represents just a much more rigorous and sort of full-throated understanding of the successes that these exceptional organizations bring forward. So I would say the rigor has continued to grow and impress on us as judges.
Great to hear. And I think finance and accounting professionals, rigor is something that we do very well. And so hopefully we will continue to do that and get even better within this. So thank you, Andrew, for sharing some great insights and showing your passion there. I think that really shone through. We'll be coming back to you at the end of the session for the Q&A portion. So if anyone has any specific questions for Andrew, then please pop them in the chat and we will try to cover them later. Otherwise, I will see you in a few minutes for the Q&A session. Thank you, Andrew.
Great, thank you, Catherine.
So we're now going to turn to the winners to hear more about their experiences. So I'm going to ask each of the different winners, I'm going to come round to one by one. 3 things that I want to know. So I want to know a little bit more about your role. So you will have very interesting titles. So if you can tell me more about your role, brief details of your organisation for those who may not know it, and then also why you entered the competition. So 3 things, and I'm going to start with Joe.
Hi there, yeah, so I'm Joe Collins. I'm the ESG controller at National Grid. So yeah, I sit in the group finance team. It's there's 5 of us. So the team was set up in sort of 2023. Yeah, and I joined Grid a couple of years ago. National Grid operates in the UK and the northeast of the US. We have electricity distribution and transmission companies, also gas distribution in the US, and then we have some unregulated businesses as well, some small parts of generation and also interconnectors as well. So yeah, that's me and National Grid. And then we've been involved, I should say, as well with A4S for quite a number of years as an organisation. Our CFO has been involved heavily with A4S for quite some time. So that's really how we got involved with the award ceremony, or putting our best foot forward into the mix.
That's great, thank you, Joe. And I will come to Alexander next. Exactly the same question, so a bit of detail about your role, organisation, and then why you entered.
Hi everyone, my name is Alexandre da Rocha Leão. I'm a Sustainable Finance and Business Integration Lead at Natura. Natura is a beauty company operating in Latin America with deep roots in the Amazon, working with more than 3 million beauty consultants across the continent, and a long-standing commitment to growing in ways that integrate social and environmental priorities into everyday decisions. In my role, I get to translate impacts into decision-useful numbers, so bringing financials together with environmental and social valuation, so leaders can see trade-offs clearly and act with confidence. We enter the Finance for the Future to really stress out this approach against the best in the field and to share what's working, especially in how integrated valuation is shaping real business choices, not just reporting. And in short, it's about making total value visible for people and to at a point of decision.
Yeah, very, very focused on decision making, which is fantastic, and obviously what we celebrate with the Finance for the Future Award. So thank you for that introduction. I will come to Meg next.
Hi, I'm Meg Schmidt. I'm a responsible investment analyst and climate lead at Quilter Cheviot, which is a UK-based wealth manager. And essentially my work is in leading our climate stewardship activities for our investments. So a lot of my work is actually working with companies that we invest in to make sure that they're meeting our climate expectations, and increasingly working within our own organization in setting our own climate objectives and targets for our investments. So therefore, a lot of my work is in translating climate and making a lot of the metrics and the regulatory reporting that we do a lot less frightening, both for kind of board members and executive decision makers, as well as within our business, our investment managers, who are the ones actually working with our clients to steward their financial objectives and make sure that those are reaching the sustainability objectives that they have and aligning with our own as a business. And the reason for getting involved with A4S is Obviously, we're quite keen in sharing best practice around what smaller investment firms can do, like ourselves, on climate, because there's a lot of larger asset managers, and for smaller wealth managers like ourselves, it's a very different game in terms of actually setting achievable targets. So that was part of why we got involved and how we ended up applying for the awards.
Great, thank you very much for that introduction. I like the word of alignment, so aligning your sustainability and financial, and then with your clients as well. Fantastic. And finally, but not least, of course, is Kukai.
Thanks, Catherine. So my name is Kukai. I'm the Executive Director of the Center for Climate and Business Solutions at GBC Sauder School of Business. We established at the business school about 2 years ago with really the objective to accelerate the climate solutions by turning business education into something practical. So we want to help companies make sense of climate, how to actually do things. We call this at the business school the intention action gap, where we have the intention of obviously reaching to the net zero, adapting to the climate risk, but there's really, different ways of how to get there. And at the same time, we really see that, our students can be sort of the driving forces in supporting companies, especially small and medium-sized businesses. So in my role, I get to really design different programs that help bring the students together with companies to integrate that practical skills and practical solutions to help the industry move forward in various challenges.
Great, thank you very much. I love that intention to action gap, which I'm sure we suffer from it in lots of different ways, and I think it's really good to highlight that and work out how you can close that gap. So fantastic, thank you everyone for those introductions. I'm now going to come round and ask some more detailed questions about your specific award entries. So I'm going to come back to Jo first. And as in the introduction with Andrew, we talked about specific examples and bringing things to life. So could you give us some examples of the work that your team has done to integrate sustainability into core financial processes?
Yeah, sure. So at National Grid, our sustainability objectives and goals are set out in what we call our Responsible Business Charter, which is something that we issued in 2020 and then refreshed in 23. So that really sets the sort of focus areas and goals that we have across various ESG pillars. And then that, I think, alongside sort of a clear definition of an understanding of what our reporting ambition would be around that charter. So being really clear on the intended purpose of external reporting and internal reporting requirements. And that sort of covers frameworks, monetary standards, also things like ESG rating agencies as well. So, we've taken an approach that we call sort of being sort of strategist in terms of, strong alignment and compliance with mandatory requirements, and then adopting voluntary frameworks where we really feel that there's a sort of strategic benefit in doing so. So having that sort of clear definition and endorsement has really set the tone and understanding of objectives in terms of embedding requirements into the financial processes. So once we have that established, then it's utilizing things that are effectively already in the finance sort of way of doing things. So we have an enterprise performance management framework, which is sort of quarterly routines around metrics and targets. So those some of those goals and targets in our RBC are now dovetailed into that review process, which sets sub-targets for BUs, make sure that they have commentary and analysis on their performance against those, and gives a good lens on how we're performing across the business. Then sort of in terms of planning processes, again, a similar approach to try and dovetail and piggyback onto a sort of strategic business sort of forward-looking process to make sure that ESG, particularly emissions, are factored into that review cycle, has been an important piece to try and embed sustainability requirements into our financial processes. Then I guess an important one is controls and assurance procedures. So a lot of work from my team to try and embed those using tools, but also making sure there's rigor around what's getting submitted, working with external insurance providers and upskilling and trying to provide more rigor, I guess, to some of Andrew's earlier comments as well. So making sure that we're pushing that forward. And then some, sort of more bespoke areas around sort of green financing, using our EU taxonomy reporting to help with our treasury team issuing green bonds. And then really just sort of trying to coordinate this across lots of different teams. So, we have to sort of use that board direction to collaborate with different finance teams, sustainability teams, risk, investor relations, etc. So it's an iterative process. It's evolving. We know there's still lots of improvement areas, but that's some of the things that we're trying to do at Grid at the moment.
Well, sounds fantastic, and like you say, trying to integrate into that business as usual and having that quarterly reporting so you get a sense of where you are and making sure that it's done at the business unit level, so it's not just group but it's actually into where things happen. So yeah, that all sounds fantastic. You mentioned the coordination piece. Can you give us a bit more of a sense of how that cross-functional collaboration played a role in delivering those initiatives, and kind of how, maybe a bit more about how you went about it?
Yeah, so it's it's been really essential for us to partner with different teams, primarily the group sustainability teams, but then maybe some of those assurance control procedures. It's directly engaging with operational teams that maybe don't have finance or accounting backgrounds, and sort of upskilling them in terms of what good controls and procedures look like to help with the robustness and accuracy of the reporting. In terms of how we go about this, it's there's a sort of a bit of a spectrum, I would say, of sort of routines that have been established. So we have sort of steer codes with more sort of exec leadership on there, which we can flag upcoming or new trends or key decisions, and that's fairly routine decisions that we sit on alongside the sustainability team. And then there's various other routines that to different levels of degrees across the business, down to sort of community best practice sharing forums as well, to just make sure that we're sort of communicating as best we can across all the different teams and functions. Each year we have a joint committee meeting between the Safety and Sustainability Committee of our board and the Audit and Risk Committee. And I think that works really well to sort of bring those two committees together and have a really solid discussion platform around some key decisions that need to be made, and really help set the direction for the next year. So all of these are sort of some of the processes that we're doing at the moment. And then I think the collaboration is sort of ever increasing as well. I would say we're doing more and more with procurement, more and more with IT, trying to get more systems and data, and then being really close to risk management teams as well. And I think those are sort of three functions that we're working more and more with on various projects.
Yeah, I mean, sustainability cuts across so many different areas, and that collaboration piece, it is so key to make it efficient and effective to integrate. So yes, thank you very much for sharing that. I'm going to ask you one final question before I move on to the next person. So not only did you win Team of the Year, but you also won the Leadership Award for Communicating Integrated Thinking. Can you give us some details on how your communications set out that integrated thinking, so that your organisation's overall strategy and decision-making process, and how sustainability is embedded in it? That would be great. Thank you.
Yeah, so I mean, first of all, I'd say sort of benefit from the role, purpose, and vision of National Grid. So being a company that is sort of lying at the heart of the energy transition in the regions where we operate, that really helps with making sure that we've got lined up communication. So I think it's across a lot of our disclosures, but maybe primarily on our sort of climate transition plan reporting as well. We make sure that we're really sort of focused on clarity, transparency, and also more recently, probably simplification as well, sort of consolidating things down. So we've moved to integrated reporting within our annual reports, trying to condense and be more concise with our communications. And then that makes sure that the key messages are landing. So, you know, within that transition plan that I've talked about, we we need to make sure that it's clear about our role, and that being to help the energy transition in the areas that where we operate, and that's our sort of primary driver. And then beyond that, it's around our own emissions, and we have to be really clear around, you know, the dependencies there in terms of that net zero goal that we've got. So where we need policy and regulation help, you know, being really clear on that, and those disclosures is something that's been really important to us at National Grid. All of this comms is sort of a joint effort across finance, sustainability, corporate affairs, and then, you know, my team, we've worked closely with the sustainability team to try and make all of this information more accessible. So an updated website with a reporting center that has all of our disclosures, our policies, our approach to various topics all in one place that makes it easier for investors and stakeholders to get hold of. So that's some of the sort of efforts that we've had on communications in the last 12 to 24 months.
I think that's a great message there on simplification. I think there's so much out there, and it's working out how you can get the message across and make it accessible, and it's reaching the right stakeholders. So that's great. Thank you very much, Joe. If you have any questions for Joe, then do feel free to put them in the chat and we'll come to them later. I'm going to move on to Meg now.
Hello.
Hello. So I believe that you authored Quilter Cheviot's first climate action plan. Can you tell us something around the main challenges you encountered and also some of the key insights you gained?
Sure, yeah, very happy to. So our climate action plan is really about assessing and mitigating the impacts of the emissions associated with our investments. So a much harder thing to tackle than just operational footprints. And our main challenge in setting out a climate strategy is one that many organizations face. And basically it's about striking that balance between achievability and ambition. And for us, particularly with investments that we don't always control directly, i.e. where they're kind of held by a third-party fund, that can be quite tricky. And really for us, in putting together a plan that we obviously wanted to be able to commit to, and something that's actionable, a lot of it was about wanting to find those proven and well thought out methodologies that would deliver the decarbonization that we want to see within our investment universe, as we call it, but also making a commitment that will actually be deliverable even with factors that are outside of our control. And the key insight for us in terms of overcoming that kind of obstacle is really in building something that works with the systems that we have and works with the challenges that we have, basically the way that our organization operates. So for us, that was about making sure that whatever climate alignment system that we're looking at for our investments in terms of categorizing them and assessing how our stewardship was going to address the climate risks that those businesses are facing. It was really about making a climate alignment test, as we call it, a CAT, that actually reflects the processes that we use in our investment process. So our research analysts have been intimately involved in actually testing out the climate alignment test, the criteria and the data that is going into that kind of scorecard, to make sure that as much as we're leveraging those third-party data sets, that we really appreciate the guidance that is best practice out there, the systems like Net Zero Investment Framework, Climate Action 100 Benchmark, World Benchmarking Alliance, all of those data sources. It's also coming out with an output that our research analysts will engage with, that they understand, and that isn't, riddled with acronyms that they won't want to tackle, or, numbers that are meaningless to them, really. So the main insight, I guess, for us in terms of building up these systems is being cognizant of the environment in which they're in and making sure that whatever we're constructing is actually going to integrate nicely in the systems and processes that people are familiar with and ultimately fit within our investment process as it is, because nobody is very receptive to sustainability changes when they come with massive changes to how they do their work day to day. So that was really the main insight for us, was we couldn't shy away from the kind of upskilling that has to come with these systems, and making sure that people didn't see this as kind of something that's done by another part of the business, something that they don't need to kind of engage with or talk to, and they can just kind of shunt it off to the side. It was very important for us to actually build something that people knew that there's a resource that they can go to. It's not a frightening having to relearn, the alphabet of how to make sure that your clients' investments are aligning to what they expect them to do. But it also is something that will be effectively used and actually will lead to decarbonization over time.
Absolutely. It's so important to make sure that it's something that is useful and practical and integrated into what people do, so it's not seen as something extra, but it's just part of their jobs, and it is useful. And I think the collaboration piece as well, of making sure that you're developing something that is useful to people, it is really important. So thank you very much for that. I wanted to move on to nature. So obviously we've talked about the climate action plan. So I wanted to understand how you collaborate with others within the industry around nature, and what are the benefits of that collaboration as well. So a key theme coming out is collaboration, I think, in this webinar.
Absolutely. Yeah. I mean, many hands make light work, right? So I think for us, within the investment kind of space, collaborative engagements in stewardship are quite common. So this is where essentially multiple investors in the same company or entity come together to actually engage with that company or entity together, because you can kind of pool your resources. And a lot of the value for us that we see in collaborations is kind of twofold. There's obvious benefits for us in that we're a relatively small investor. So a lot of these collaborations give us access to companies that may not necessarily be as accessible to us normally because of our size. We're not a BlackRock. But the other side of that collaborative benefit is actually for the companies, especially in areas where guidance isn't as established as in the case with nature. It's a really valuable forum for those companies and entities to actually sound out their thinking on this and actually ask us for what kinds of things investors are looking for. A lot of the time, folks that are in engagement and stewardship and specialize in these areas know about external data sets. They know about emerging, kind of best practice thought around this. They have other examples from within their portfolios. They have a lot of feedback that can be really helpful to companies, particularly where they may not necessarily have the expertise yet, regardless of their size. The kind of Tesco's and Rio Tintos of the world are not going to have massively developed capacities in this space yet. So a lot of these collaborations, their greatest benefit that I see, for the businesses themselves, is to really have a supportive audience to work through and really build up a nature strategy that obviously works for the business and is something they can deliver, but also expand their kind of vision a bit on what they see as possible by either sharing best practice from across the sector or from other businesses that have similar nature-related risks and dependencies, or also, connecting them with useful resources. There's a lot of other stakeholders in the kind of extended shareholder universe from their view that can be really helpful in terms of third-party data sets or nonprofits in the area that have developed tools that they can look to kind of model and mimic, which again can help steer their strategy in terms of developing something that they feel more comfortable delivering and presenting to shareholders, without it being necessarily, a fait accompli. They can kind of debut it with us in a soft launch and get feedback without it being, a kind of high pressure this is it, we can't change it because we put it out in public. So I think particularly, so we're working through the UNPRI Spring Initiative, which is looking at key commodities and the nature risks associated with them, and also Nature Action 100. And these venues are actually really useful forums, particularly in this stage where we're really helping companies and the industry more broadly, those industries that are most exposed to these risks, really define what best practice is going to be and help them step up that ambition of what best practice looks like over time.
Absolutely, and I think it really important to drive that ambition and sharing what is best practice and what others are doing. Which so thank you very much for sharing on both climate and nature within that. So we're going to move on to our next panelist. So Alexandre, can you share a bit more about the integrated profit and loss account? I think you mentioned it briefly before that your team has developed at Natura, and also how that then links to informing decisions.
So Natura has been pioneering sustainability management for a long time and working with valuation specifically for now more than 10 years. And our integrated P&L consolidates this strategy in an accrual basis instrument that complements the financial P&L itself by monetizing material, environmental, and social externalities to show net value that is created for stakeholders, not just shareholders. So the idea here is that we start from the financial P&L, the business activities that are behind it. For each material, activity, product, we then quantify natural capital impacts that are GHG emissions, water use, land use, and social and human capital outcomes. For example, wages versus living wage in that specific region, health and safety, community investments and infrastructure. And we convert this into a comparable monetary value using transparent and defensible prices and assumptions that are part from this model and methodology. So we can aggregate everything into a single value model that expresses expected changes in quality of life. This is aligned with what Natura's belief as its reason for being, which is well-being and being well. So the well-being of the individual with themselves, with others, and with the world we inhabit. And we use this to inform better decisions in a way that we can complement business cases in investments and portfolio choices, compare options by total value that is created or destroyed. So for reformulations in products, for packaging, for sourcing, in our supplier engagement as well, we can identify hotspots to guide what are the scorecards and the improvement plans that these teams need to work on. And on strategy and storytelling, of course, it's so important that we can communicate and translate sustainability in a way that is understandable throughout the whole business. So we can connect purpose to performance in a CFO-friendly manner and language. And as a decision effect, we can have definitely faster trade-offs and clearer prioritization of the actions that we are working on, and stronger cross-functional alignment between teams. This is the way that we believe that we can put really a total value on a financial portfolio and instruments.
I love that, connecting purpose and performance in one tool, so people have that visibility. So I think that's one of the key things. You need to know what's there, and what's tangible and what's visible to inform that decision making. So I'd like to come on to the social aspect of it. So can you explain how you integrated societal considerations into natural capital assessments? And again, similarly, what kind of challenges and insights did you gain from that?
Definitely. So within the model, we are pairing basically biophysical impacts with distributional social effects that are benefiting someone or bearing costs to someone, and making this visible, not just the totals, but the very granular specific activities that are part of our business. So we can merge life cycle assessment results in carbon, in water, again, in land use, and in so many different aspects, more than 17 different aspects across the natural capital, with social valuation across different areas of protection. It could be a human health area, it could be an ecosystem health, or a resources use area of protection. And we can use, again, this fair wages, livelihood, community well-being, understandable parameters, and establish concepts and shadow prices that are parts of this model. So if we're talking carbon, for example, we can complement this information with social cost of carbon. And we can use this also to inform other decisions. So using this as an internal carbon price to assess projects. So we evaluate through a well-being lens, again, integrating the natural, the social, and the human capitals in one model only. And this is what I understand is the biggest innovation behind our newest update. So bringing this LCA together with the quality of life valuation. So again, humans and nature are viewed jointly. And I feel this is a way also to show how we're part of this world and how we should contribute to improving this impact within society. And then we can add also geography and stakeholder lenses to this. So workers, suppliers, communities, and everyone through what we call our relationship network is considered within this model, and avoid some averages only conclusions that we can do for a specific public. But the challenges here are definitely in data granularity, in the within the parameters that we use as well, that sometimes again are based on the global north and not necessarily within our global south specificity. And of course in boundaries and in double counting sometimes these activities. So it's a very thoughtful process that we go through every year. And we're now able to close this number quarterly. So we've been improving a lot in the assessment game, and agreeing also in prices, in assumptions that should be used also to drive decision making with finance, with governance also for these updates. And on the key insights, I believe that including societal distribution and this priorities on natural capital can bring some actions that will look better, definitely, for the business in the future. This complements the vision that we've been also constructing, which is our 2050 vision, having the IPNL as a parameter for regeneration also, believing that we should have a net positive across all different capitals and not only within the produced capital. Having more transparency also and sensitivity in the ranges that we believe are more material for the company, for decision makers. And this helps us with our risk assessments internally. This helps us with definitely with reporting. And it's basically a double materiality that is dynamic and that we can see working on throughout time. I think these are the main insights.
Well, you've definitely sold it as a model, and all of the different insights that you've got, and the breadth of it sounds fantastic as well. Covering all of the different capitals and being able to capture it quarterly as well is a great achievement. So congratulations on that, and thank you for sharing all of those. I'm going to go to, I'm just recognising we're running a little short on time, so I'm going to go to Kukai. Can you share more about your SME climate clinic and thinking about how it combines training and product innovation?
So I mentioned earlier in my role at the Center for Climate and Business Solutions, we get to design programs that not only teach the students with the practical climate skills, but thinking about how do we embed it with industry and help them solve, various climate challenges and becoming a part of the climate transition. So we start first with carbon accounting. So the BMO SME Climate Clinic program, we teach students that practical carbon accounting skills, how to calculate the scope 1, 2, and 3 emissions. And then we pair them with the small and medium-sized companies that, do need to have that emissions reporting, but may not have the time, the resources, or, just in general, like the ability to really allocate resources to calculate the emissions. So we've heard the students with the small and medium-sized companies, and then, the students not only get to learn, they get to, graduate from the program with that practical skills that they can show to the employers that they have done this and supported the companies, but also the companies themselves as well get to have that emissions reports. So then they can help use that to either respond to their investors' demand or the customers' demand. So this is something that I think is quite innovative in terms of our approach to not only teaching the students with the skills and not only just supporting the companies, but combining the two. So I'm really proud of that.
Yeah, you should be. It's a great approach because it's often one of the challenges that people say SMEs don't have the resources and the technical skills. So being able to fill that gap and both parties benefit is fantastic. So a little bit more on the benefits of the clinic. So the environmental or social outcomes and benefits, and maybe share an example that could help to bring it to life.
Yeah. I mean, the clinic, because we work with both students and companies, we can really share the impact from both sides. So far, we supported about 39 businesses, and we've trained about 152 students as a result of that. It's not only just the small businesses that come through our programs as well. I think a number of our participants on the webinar here, may also require sort of the small business suppliers in the supply chain to report on the carbon emissions as well. So we do partner with large companies, and our clinic is almost like a way to support the large businesses in, engaging with the small business suppliers. So the small businesses come through our programs, but we also support large businesses that also need to really support the small business suppliers in answering sort of the requests of the carbon emissions too. So that's kind of like the impact that you can kind of see right away in terms of the number of companies we support and the number of students that we train. Beyond that, we're based at the business school and we're at the university. We also want to be able to educate, everyone in terms of why calculate the carbon emissions. What are, the different ways that you can actually use the emissions data in actually unlocking business growth opportunities. So we continue to tell the stories through the work that we do at the clinic, whether it's, companies that are able to reduce the cost because they understand the emissions hotspots. So they're able to reduce the cost as a result of that, or companies that are able to unlock growth opportunities. We've had a number of companies that come throughout programs that actually use the emissions data to actually, report to the investors and getting that investments, or they use that to, grow their businesses to, other regions of the world that do require sort of that emissions data as a result. So we want to be able to share those stories because, at this time, what we're seeing in the landscape is that, well, why work on climate initiatives when the spirit of the climate change may not be of the higher priorities. We want to be able to link that back to business decisions and the purpose of growing the businesses.
Absolutely, to be able to show those different decisions. I'm just going to apologise to everyone that I misjudged the timing and now I'm sat in the dark. So that hour's different of the clock change is obviously affected. But hopefully you can still see me and you can hear me. So I apologise for that. We have a few minutes left of the webinar. So if anyone has any burning questions, please do put them in the chat. Otherwise, I'm going to ask everybody. So I'll ask you all individually. Andrew, if you have any burning questions, do feel free to ask any of the panelists. Otherwise, I'm going to ask what advice.
I'd love to know, if I may, Catherine, I'd love to know when you knew, and it can be a very brief answer, when you knew that you had the confidence to put the submission forward in the competition. What was the spark?
Joe, what was your spark?
I would have to say it's a team member of mine. So there was somebody who came forward and said that there was this awards process and thought we should put our hands up. And yeah, I thought it was a good decision. So we got the endorsement from our sort of our boss and the CFO, and yeah, it was a really good process for the team. So there's 5 of us in total in my team, and actually I think it was a really good opportunity for them to present all the things they're working on, getting some immediate feedback from the judges at the sort of presentation stage was also really good. So yeah, it was sort of sparked by someone in my team is how it sort of was the genesis for National Good. Yeah.
What about you, Meg?
It was a nudge from the charities team within our organization, because I only joined Quilt Achievia as their kind of inaugural climate head almost 3 years ago. And yeah, after we'd had a conversation, he had previously heard of A4S, and he said, what we're doing at Quilt Achievia, at what we're doing at our kind of size is much harder than I think a lot of people might be aware of. You should put yourself forward and talk about some of the unique challenges and how we've found ways around them. And yeah, I've had subsequent conversations at a kind of wealth managers on climate roundtable that we're a member of, about the specificity of the challenges for smaller investors. And yeah, as part of that, was inspired to submit.
Well, that's great. The climate plan that you put together obviously caught people's attention, and they gave you positive affirmation to give you this nudge forward. That's wonderful. What about you, Alessandra?
Yeah, very similar to Joe, but it was actually a colleague of mine that signed me up and enrolled me for the Rising Star Award, which for me itself, it was already an award to have this commendation from them. And then definitely I wanted to know more about the Finance for the Future. I knew it previously because we won also a high commendation for the model that we work on, the integrated profit and loss. So basically very happy of joining this group of people that is very, very interesting. And I would love to keep on this journey with all of you. Thank you.
Well, Andrew, you started the webinar with the word passion. So I would say we have passionate faculty member who's been a part of the academy. We have a passionate team member who also submitted, our application as part of the awards. And, I would say when we knew that we wanted to, tell the world what we do is when we realized that the model that we have is quite scalable. This can be done really at any universities and any business schools or even outside of the business schools where, we empower students to actually work with businesses. And that's sort of the purpose and the mission of why we created the Climate Center in the first place at UBC Sauder is that, we see that, we don't have to just have the learnings within the classroom, so we can actually partner with businesses and help, be a part of the progress. So
that's wonderful.
Going back to the passion in the beginning.
That's wonderful. That's wonderful. I hijacked this Q&A from you, Catherine. Back to you. Thank you.
It was a perfect question, and I think it brings us really nicely full circle round from the webinar. So we started with passion, and we're ending with passion. So I think that is one of the key words from the webinar. We have 1 more minute, so I'm going to quickly say that the entries are open for the 2026 Finance for the Future Awards. As you've heard today, hopefully it's a fantastic opportunity to recognise and celebrate what your organisation's doing and what individuals are doing as well, thinking about integrating sustainability into financial decision making and also being that catalyst for change as well. So you'll see in the chat that we've shared links to the entry form and the categories, so you can find more information there. Key deadline for submission is Friday the 19th of December 2025. So please submit your entries by that date. And if you have any questions about the awards, you can email us. Again, the address is provided in the chat. And hopefully you've heard today and you know that the awards are a great opportunity to share achievements and showcase your work. We'd also like to invite you to join us at the A4S Online Summit, which is happening the week commencing the Monday, 1st of December. And speakers will be highlighting finance leadership that's making a difference now, and also looking at ways that we can fast track to a just, nature positive and net zero economy. And details will be released soon, so please keep an eye on our website for that. And otherwise, it just leaves me to thank our speakers from today. So thank you for all your insights, sharing your stories, giving us some more information. So thank you to Andrew, Alexandre, Joe, Kukai, and Meg. Thank you very much, everybody, and enjoy the rest of your day.